For 7 of 10 taxpayers, the calculations and frustrations that go into filing taxes will be worth it when that refund appears in their bank accounts. That averages about $3,000 for every check from Uncle Sam. You can do a lot of things with that money. Here are 2 recommendations for how you can put your refund toward your financial future. 1. Save it. A Bankrate Money Pulse survey found that about 1/3 of taxpayers who get a refund stash it away in savings. If you haven't saved enough for retirement, or saved anything at all, you could put that refund in an IRA or similar investment. Then leave it alone and let time make it grow through the power of compound interest. What if you're just starting out and haven't saved 3 to 6 months of living expenses in an emergency fund? Consider putting it in a basic savings or money market account, someplace where it's there when you need it, because chances are you will. 2. Pay down debt. But maybe you're trying to get rid of a big credit card balance or student loans. Well, you're hardly alone. The Bankrate survey found that nearly 3 of 10 refunds go toward paying down debt. Maybe it's a credit card balance that just won't go away. Maybe it's that loan you took out for college. Pay an amount toward debt that fits your budget and consider leaving some money for savings. The percentage of your refund that you put toward debt and what you put toward your nest egg varies based on your individual situation, how much debt you owe, and the interest rate. And what you decide to do with your refund may change next year. About next year's refund. Yep, that big refund looks great. But if it's too big, that means you've been letting the government hold on to money that should have stayed in your pocket. You should take another look at whether the right amount of tax is being withheld from your paycheck. Ask your employer for a W-4 form and recalculate to be sure the government is not taking out more than you owe. It's an especially good time to recalculate your withholding before you begin planning for next year's taxes. Among the many changes as a result of tax reform is a new W-4 withholding form. Use your 2017 tax return to help figure out the withholding amount that's best for you. When the new tax code kicks in, new withholding is just one of the changes in store for taxpayers when they hunker down over the calculator next year. New tax brackets, and most significant to the nearly 50 million taxpayers who itemize their deduction, standard deductions that are nearly twice as big as this year's. For many taxpayers, it will mean that itemizing deductions for things such as mortgage interest aren't the way to file and still get the largest refund. That's a big change, and it's one of many that may make next year even more taxing. Talk with an accountant or a financial professional, such as a certified financial planner or accredited financial counselor, for tips on how you may be able to lessen your tax liability and put more money towards savings, retirement, or paying down debt. For more information and more resources, including the Changing Tax Day to Saving Day video, visit wi65.org.